We haven't got a main projector yet. It may come on halfway through, but we'll go for it anyway now. If you look at those TV screens around the side, you'll see what we're talking about. And I'm just going to give a number of case studies, so hopefully it will make sense without looking at it anyway. I'm Dixon. The way I got into this subject and Bitcoin is I actually wrote a book called Bank to the Future. And the first draft of this book was written in 2006. And I worked at an investment bank at the time. And I was a couple of years as a market maker on the London Stock Exchange for an investment bank called KBC. As companies IPO onto the London Stock Exchange. Prior to that, I studied up to master's level economics. And for 4 years, I completely disagreed with everything that I learned in the science of economics. And so after a couple of years of investment banking and really learning how the markets work, I decided to return to my interest in economics and started looking at how economics has forgotten in all of its models one of the most important things. All of the economic models that we run all of our economies in the modern age on are based upon economic theories which don't actually factor in the true modern understanding of how money is created. And therefore I returned to that and I wrote this book called Bank to the Future. And this book, Bank to the Future, was mainly focused on an upcoming crash in banking and what banks and governments are going to need to do once the banking system collapses. I was in the UK at the time and I was completely ridiculed because at the time it was a completely bull market, things were going really well, and it was a very controversial subject. Then in 2007 the financial crisis started, and that started to get me a little bit of attention. Someone at that time, and then I wrote the next draft of the book. And the next draft was before the word fintech existed, before the word Bitcoin existed, and it had the word financial crisis just started to become to be. And so around about that time, Satoshi Nakamoto invented Bitcoin and asked me to come and speak in Prague. And the interesting thing, this was the first ever Bitcoin conference in the world. I remember the price had crashed to $3 at the time from $20. There was a startup pitching, a gentleman called Tony Galippi, who was pitching his concept called BitPay. And there was a gentleman, myself and a guy called Max Kaiser, who's a financial journalist on Russia Today, RT, who was paneling an event and discussing the impact in financial markets. And the other half were what I call probably activists that had some problems and with the way the banking was actually working. And it's amazing now to travel all around the world and see just the type of level of engagement now in this technology. And so what I'd like to do today is I'd like to show you the real world impacts that Bitcoin blockchain is having in two markets, and sustainable. And then fintech came along and entrepreneurs created lots of ways where we no longer needed to rely on top-down reforms. Rather, they reinvented systems from the ground up, bottom up. And so, because this is a very successful multinational corporate and accumulating vast wealth through your company, and it was very limited to each time you go up the chain, it's a tinier and smaller percentage of people that had access to that capital. So, but what happened in 2007 is through the systemic risks in the financial markets, which were based upon all banks being dependent upon property markets and continually increasing in order to remain solvent, we had disruption when those markets completely seized up. And so therefore we moved to the new market, which I'm about to show in the next. Firstly, the reason that on a global scale we have more and more businesses than we've ever had before was because the cost to starting a company significantly shrank with all the Silicon Valley startups that were giving. They're looking for you to have traction and customers and revenues and all those things. But you're saying to the investor, well, I can't get traction and revenues and all these things because I don't have enough money to invest in the staff, and everything that's needed and the marketing to get that traction. So in the startup world, there's this whole chicken and egg scenario where a startup's trying to prove to an investor what they can do with no money, so that the investor invests, but what they're looking for